What is up, everyone? Real quick, I made a mistake and I accidentally recorded this podcast using my webcam's microphone instead of my professional microphone. So I apologize ahead of time if my voice sounds very echoey. But nonetheless, we have a super exciting guest on this podcast episode, and I hope you guys enjoy it just as much as I enjoyed recording it and making it for you. All right, let's get into it. Welcome back, everyone, to the fifth episode of Breaking Into and Out of Wall Street. On this episode, I'm super excited to have Michael Chang. And just a quick background about this guy. He was a senior investment banker who spent almost a decade on Wall Street before taking the leap of faith and becoming an Airbnb entrepreneur. Today, he is the founder of Trust B&B, which is a property management company focused on short-term rentals. And he is also an investor and advisor to a SPAC. So for that, Michael, it's great to have you on.
Thanks, Andrew. Thank you for inviting me.
Yeah, so I'm trying to figure out where to even begin here. So obviously I did a little research on your background and I want to do it justice, right? But how about we start out all the way back to the college days, right? Or if you want to talk about college, is fine, but you just graduated. I know you didn't go straight into investment banking out of undergrad. You went through the MBA route. So why don't you talk about that process a little bit? What was it like graduating from UC San Diego, by the way? People that don't know, we're from the same undergraduate school. Go Tritons. What was it like graduating as an undergraduate, and then how did you and why did you end up pursuing investment banking?
Yeah, no, thanks for the great question. So I graduated. So my background, I graduated from UCSD in 2002. Remember back 20 years ago, that was pretty tough time economically. We're kind of getting out of the dot-com crisis. So that was kind of right when I graduated, and then I worked for a few years. Went to get my MBA at Cornell. Graduated in 2009. Again, great timing because that was right out of the financial crisis. But actually, in an odd way, it was actually very good because you kind of bind the low there. So I got in right at the low of the cycle. And then, I was a summer associate at Citi in New York in the M&A and technology groups. Opted to join the M&A group full time. I was there for 5 years. Was promoted to vice president. And then I got recruited to go to Bank of America Merrill Lynch in their M&A group as well. I wanted to focus on technology, so I had the opportunity to focus on tech M&A when I was at B of A. So I was there for about 2.5 years, and then I moved over to Jefferies, where I actually sat within the tech team, doing M&A, but I wanted to be much more part of the technology group. So that, I was there for 1.5 to 2 years, but after 10 years, it was kind of time for me to embark on my own journey. I was working 10 years to achieve other people's dreams and, wanted to work on, kind of pursuing my dream. And, been able to build Trust B&B with my partner and wife over the last 5 years to, what it is today. We are located in Pennsylvania and Tennessee. We have 26 properties that we own and operate in these geographies. Andrew, I'm happy to talk more about, if you want to, we can talk a little bit about kind of how college was, and then, trying to break into investment banking at UCSD or a non-target school to make it broader. And then, happy to talk about that.
Were you trying to get into investment banking out of undergrad? Was that?
I was in 2000, 2002, I took a lot of accounting courses, try to differentiate myself by, going for the honors track. It's always, and this is 20 years ago. It was even more difficult 20 years ago to,
it was pretty hard when I did it. So I can't even imagine 20 years ago.
Yeah, the breaking investment banking. I mean, it was a lot harder. Right? There was no LinkedIn. There was no, the internet was in its infancy. So it really was like, you had to call the alumni handbook by hand and on a landline and call and email people to try to get on the phone with them. So I was actually fortunate. I had some friends at UCLA that I was able to kind of go up and try to interject myself into their recruiting process. and had a few interviews, but ultimately wasn't successful. It's very, very difficult to it was very, very difficult, and I think it still remains fairly difficult to get in from a non-target school, but
Mhm.
now a lot easier. There's a lot more resources now. And through my the 10-year career at investment banking, and seeing a lot of people from traditionally non-target schools, people that really hustled and found different ways to join an investment bank,
Yeah.
and make a lot of good progress actually in your career. So it's definitely doable. It's not as linear as it used to be.
Yeah, yeah, that's kind of funny. What you just said there about like joining the UCL recruitment cycle and like whatever they were doing. When I was recruiting for investment banking, I used to go to like USC recruitment events. I would just like go to the like info sessions and crash it and be like, "Yeah, I don't go to school by the way, but I'd love to work for a company." And they'll be like, "Who are you? What are you doing here?"
Yeah.
I know it's kind of funny. But okay, so you ultimately, you went through the MBA route. You wanted to get into investment banking. What was the experience like for you, like working like within the industry? Like, what was like the first couple of years like? Was it kind of like what you expected? Was it what you wanted, or was it from like day one? You're like, ooh, because obviously we were talking about how you eventually left. What like was day one? You're like, I don't know about this, or was it at first also like, yeah, this is everything I ever wanted in my life?
I don't know if I was kind of at either poles, but it was definitely I knew kind of what I was getting into. I had some mentors. So the last job that before I went to get my MBA, there I was working with three former senior investment bankers that had launched a business. So they were very clear on like expectations on what what would be what would be my role as a junior banker. So I definitely went in eyes wide open, and candidly it was tough, and this was pre-COVID. There were not a lot of the guardrails that I think people are used to today. There was a lot of swearing at you if you mess things up. A lot of all nighters. Slept in the lounge. I don't know how many times. Just really kind of traditional investment banking, especially early on, kind of pre 2014. There was still that ethos that, kind of
Mm,
pre Dodd Frank ethos that still kind of permeated through the bank. So, um, you know, yeah, you got yelled at, you got people would swear at you. I had an associate one time at 5 a.m, literally took a baseball bat in the bathroom and like literally destroy the bathroom because he was
whoa.
like frustrated. And then people were just like, oh, that's just. I'm not going to name names, of course, but that's just this person. And then 8 in the morning, he went home, showered, and got up, and then no one peeped a single word, and maintenance went in there and fixed it, and it was just kind of like that was that. So it was a very different time. There were very different times. That behavior today, the immediate dismissal probably with prejudice.
Yeah.
So yeah, so it was really kind of what I thought it was, and I was really excited about it. But I think it was just more as time went on. I just realized that although it was a great job, a lot of prestige, great pay, working with great companies, learned a ton too. But I think ultimately, I saw myself more as an entrepreneur, and I had entrepreneurial activities when I was younger. So that was something that I always wanted to pursue. And after 10 years, being able to being able to accumulate capital, but also I think more importantly, kind of see very successful businesses from the inside, right?
Hmm.
On the M&A side, really seeing how operators built their businesses, how they organize financially. That has helped immensely in my journey as an entrepreneur.
Interesting, interesting. I want to kind of double click a little more of like just your journey throughout investment banking. First of all, I'm actually kind of curious your thoughts on this. Do you actually think that was better back in the day like that? Because do you feel like it almost the pendulum swung too far the other way in which investment banking is a little too PC right now? Or do you think it's like when you obviously you left around like 2018, I believe? Do you think that was like kind of like a good spot? Like, yeah, this is what the industry should be like. Or do you kind of miss the bro culture of it, for like a better word?
Yeah, I mean, I think there's some aspects of it that were valuable. That were valuable. There were, I don't think going with a baseball bat and destroying a bathroom to show how frustrated you were. I don't think that's actually like appropriate behavior.
Probably not.
But you definitely there was very low tolerance for error. not to say that it is more accepted now, but back then, you really were expected to come in and know the numbers. There should be any formatting mistake, simple formatting mistakes. And even as an associate, being able to walk in and, like just knowing, very basic things, just knowing what the company does, knowing the multiples, like what does it trade at? What is the EBITDA next year? These very simple questions that
Mm.
now I don't know if bankers really, junior bankers, like they think that way, but when you walked in a meeting before, for example, on the cover page, you would just have like, what were the multiples and what was the EBITDA? Because to be asked. And if you couldn't answer those basic questions, then, it's going to be a difficult conversation. It's going to be, a difficult conversation with the MD there because, they knew that you didn't really know what you were doing. So, every little thing they were going to poke holes in, and, it's going to make your life kind of miserable. So I think there's definitely value to that. You learned a lot faster. And, for some people it was good. And for some people, it didn't work out, and they left the industry a little earlier. I think
Yeah.
now, there is the trend of like quiet quitting and things like that where, and with remote work, obviously it makes that easier. But definitely 10 years ago, 8 years ago, that was not the case.
What
And
what what,
there
what
are
are your
fewer places to hide.
What are your thoughts about that? The whole quiet. I think quiet quitting is just it's like a new way of saying like resting investing. Is like this terminology's been around for a long time, but everyone treats it like it's like a new thing now because TikTok made it a new thing. But what kind of
Yeah.
what are your thoughts about that? Like the whole idea of like quiet quitting, right? Just doing the bare minimum just to get by. Because honestly, I feel like shit, man. I feel like that's 8% of people, anyways.
Yeah. Like I think remote work makes it a lot easier, right? So now that everyone's back in the office, especially the banks, that's going to be, it's going to be it's going to be a rude awakening, right? And then, people are going to decide if this is for them or not. I think, there's two perspectives, right? If you're a junior banker that doesn't view it as a real career path, and
Hmm.
that you're here for, the compensation or prestige, or it's a stepping stone to something else. I think, you're gonna have a certain perspective. I think, well, I know for me, if I was still a director and I had associates and analysts or VPs that were quiet quitting, it would be, immensely frustrating because the demands on me would not change, and I would expect support from the broader team. And, candidly, before, expectation is that if you sent the email at 10:30 on a Friday, it would be responded to within, a very short period of time.
Yeah.
And, if you don't, if you're like, hey, we need to turn comments for something tomorrow, and it's, 9:30 on a Friday, and, you don't get a response, it's going to be a pretty frustrating experience for, the senior person who, or like the director or the VP who ultimately will need to deliver that product to the client. Less so now, right? Obviously, market's slower now, and I don't discount how busy and how much stress people are under, in 2021. Um, you know, this year I think it's been a lot easier on people, and I think a lot of people are probably worried now, just given it's slower, right? So, if you're a senior associate that's been quitting for the last 2 years. You're probably pretty worried because risks might be coming, and you need to kind of figure out what you're going to do.
I'm actually very glad you just mentioned that because my next question to you is over the years in climbing the ranks in investment banking, right? Like you obviously went through associate to VP to director level. What is something that you have seen that allows one to, I guess, ultimately succeed in investment banking, right? Because this is my opinion. You can tell me if I'm wrong about this, but I feel like to get to analyst to associate, maybe even to get that VP promotion, you can kind of just get by a lot of times by doing what you need to do. But I really think from the VP to MD level, when you start becoming like a revenue generator for a company, you can't just get by anymore because if you're not performing, it's very obvious and you're probably not sticking around. So, um, what are your thoughts about that? And like, what have you seen that like some character traits or anything that really allows one to succeed in this like competitive industry?
Yeah, no, that's a great question, and I do agree with that. I think, especially as the industry has kind of been in a growth phase over the last 5 years, from 2016 to 21, there's definitely if you kind of did what you need, did what was expected, getting the VP promotion, was wasn't that difficult a path. Not to say it
Mhm.
was not to say it was easy.
Yeah,
There's still a
yeah.
lot of work involved, but you didn't need to be an A+ student, right? You could be an A- student and still be fine.
That's a good way to
Um,
put it. You can be an A minus B plus and still make it. Yeah.
so if you're, but to your point, when you go from director, or when you go from VP to director, and especially from director to MD, it is a very different path. The MDs need to see you as a peer, right? They need to see you as someone that can elevate their themselves, their presence, their analysis, their ability to sell
Mm.
to their level, because ultimately, MDs are expected to generate revenue, and compensations based on the revenue side, the revenue, how that particular group does against its revenue targets, right? So everyone's very cognizant of that. So, even if you're someone that's maybe not very technical, but you have a great network, and you're a great client person, that's definitely a path forward. I've seen plenty of MDs that aren't very technical, but just great. Their storytelling skills are amazing, right? So some
Hmm.
people can support that with numbers or analysis. Other people, it's more qualitative. But you need to be able. I would say that you're either the really, really technical person that just knows all the different structuring things that, and particularly on the M&A side, you can be that kind of technician specialist. You will have a role generally. You may find your life to be somewhat miserable because you're going to be doing a lot of the heavy lifting analytically.
Hmm.
But if you are someone that I think is more client facing, right? Someone that just knows everyone in the industry, knows what they're thinking, where you can kind of get through a meeting with, the multiples and kind of what's going on in industry. That in a way actually is more valuable. And now sitting on the client side, where I'm not a financial advisor, we get pitched on looking at targets and opportunities. I actually value someone much more, and maybe because I come from an M&A background, but I value, and I think clients value someone that really knows the industry well, knows the trends, knows the people, knows, and much more importantly, knows what other companies are thinking, right? Because that's going to be the most value. If you're, your industry coverage officer. So long way of saying, pick a subsector that you really like, right? Get really deep, and even if you're a junior person, start developing those. And if you see yourself as a long-term banker, start developing those relationships very early on, with the junior people that you're working with directly, because those junior people now are all, like, the people I used to work with are all CEOs and CFOs now.
Yeah.
So if you develop those relationships and cultivate those over time, you're going to be in a much better position when they're talking MDs, because as a director you'll have already, like, oh yeah, I know ABC, I know this person who is now running FP&A at this company. We can talk to him and figure out what they're doing. Like, that's differentiated versus someone that doesn't have that. So and I think that's going to be much more relevant as we go through a contraction phase in the cycle over the next
Mm.
next at least in the next year or two, right? Revenue's down pretty materially year over year.
Yeah, yeah. I think that's a very good point you made, and that's something I'm starting to see with like my own investment banking, I guess, experience, and just the colleagues I had. It's just like over time, just like, hey, the associates I used to work with, all they're VPs now. I don't have director friends yet, but I have like VP friends, and to tell myself that I will have and these guys aren't friends because you work with them through the night when they're associates and stuff. So like, I used to view VPs as like these very high up senior bankers, but now I'm just like, wait, this guy's a VP? Yeah, it's kind of like we go out for drinks and stuff.
Yeah.
But but I'm kind of curious about what you said earlier about like the more, I guess, like extroverted banker versus the more technical banker. In your opinion, is there a lot of BS that goes around in investment banking? Like, is everyone just BSing each other, or is there actually substance to what the MDs are saying to the client?
I think there. I mean, it's a mix of both, right? There's some where it's more fluff than I think substance. But look, I mean, the people on the client side are actually they're very, very smart too,
Yeah, yeah.
right? They know, right? They know when, they can cut through, the BS as well. So, you're gonna get so far being kind of the extroverted. I mean, and this is just, and I'm talking about, traditional investment banking, not, sales and trading, where, it's a little more, I think, more relationship based.
Mm. Okay.
But if you're more on, covering companies, covering private equity firms, covering, people with operating businesses, I don't know that extroverted definitely helps, but I don't think that's it's a necessary and sufficient condition. It's really, do you can you pick up the phone, or do you really know what's going on in the industry, right? It's not like, anyone can pick up a couple of initiating coverage reports and get, somewhat smart on it, do a couple of guide point calls, and, be conversant, right? But really deep knowledge, what people are thinking, what companies are thinking, right? And what are the next moves, and, how do you advise, if you have a client in that industry, how do you advise them on, what other people are doing, how they should be positioning themselves, right? That is, if you can solve that Rubik's Cube like that, you're going to have a very long and successful and lucrative career in investment banking. So, look, extroversion helps, but there are a lot of introverted people that you'll meet too, that don't really, aren't as, hey, you can go out and have three glasses of scotch to talk to you, right? They're like, hey, like, let's get on a Zoom call, let's talk business, right?
Yeah.
So there's a lot of, I think my advice really is more of like, just be, know yourself, know your strengths, right? Because you're not going to be able to, you can only kind of BS it for so long, right?
Yeah.
And then people are going to gravitate to you because of, who you are and how you conduct yourself, and, ultimately kind of what value you can deliver to them. Because ultimately, as a banker, you're ultimately, you're an agent, you're not a principal, right? You're advising, but you're not actually the person who's cutting the check. And they know that too. You're earning a commission, you're earning a fee based on that, right? So, obviously they're gonna, your client's gonna have that in mind too. So you want to kind of, you definitely want to be seen as a person who's playing the long game, and, delivering value for the fees that you're getting paid. Because a lot of people, they're happy to pay fees. Like, if I'm gonna, if you have a good, a lot of people look for good investment bankers, right? Like, hey, I really want to work with this person. And you see that a lot. Like, hey, who covers the space? Like, who are the bankers? Like, who are the really good bankers that actually know that? And candidly, they're just like one or two most of the time. And if you're that one or two, you're always going to eat.
Yeah.
Be the guy that be that guy that people call that. Be that guy be that man or woman that, people bring up in conversations when they're asking about, what bankers to talk about in a particular subsector. Like, if you can be in that conversation, you're going to be steps ahead of others.
Yeah.
Irrespective of, like, bank, pedigree or financing capabilities, like that's money is fungible. It's not really it's nice to have, but it's not. Yeah.
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 Yeah. Because people talk. They talk to each other. They know.
They talk a lot.
They know.
Yeah,
They
no,
know who
especially
knows the
people within
stuff.
industry. Yeah, they know. Yeah, they talk about all the bankers, and just like you talk about them. So it's a very, it becomes a very, very small industry. Everyone know, and now 10 years later, like, it really is. It's a very small industry. Everyone knows each other. Your reputation is very, very important.
Interesting. Well, I think that's a good segue to the next topic, which is quitting investment banking. Right? We talked briefly about this on our first call, but
Yeah.
I kind of want to dig a little bit deeper into that, about how did that process go down? Because I know for a fact it wasn't one day you woke up, you're like, I'm quitting this job. If it took me 6 months and I was on a job for like less than 2 years, my God, I don't know how long it took you. So why don't you walk us through the process of, like, when that thought first kind of came? And I usually like to think that there's a moment you knew, maybe I'm wrong, but was there like a moment you knew I gotta get out?
Yeah, I think it was. I think for me, there was a kind of a goal for myself that I wanted to achieve. Right, I wanted to make VP, and then, there's a certain level of, I wanted to get to a certain level of title and compensation. Right, so after I hit that, and then I think there was more of, self discovery. Like, what do I actually want to do with the rest of my life, and if this was something that I really felt passionate about, where I think for me, the litmus test was, I saw a lot of senior bankers, and they travel, and this is, obviously pre-COVID, but this is,
Mhm.
they travel Monday to Thursday, they work all weekend, and it's a lot. And I saw there, obviously some there, some had very good family situations, some had, less than ideal ones. And I think for me, it was like, hey, once I had, when I have a family, when I, get married, have a kid, I really want to be like a present father and a present husband. So that was obviously very, very important to me. And I think, after a few years, I realized that, the potential rewards of investment banking didn't really align with that goal, of, wanting to be very present, physically, mentally, like as a parent and as a spouse. So, after I got married, and that was very, I got married in 2017, and that was, around that time I was like, okay, this is great, but this is not something that, potentially long term. So, when I went to Jeffries, that was an attempt to reset and, go at it from more of a coverage perspective, whereas I was a primarily M&A banker. And that journey was a year and a half, and I know there was, I don't know if there was like one specific moment, but I definitely, as that experience progressed, I realized that it just was not, that seat was not for me. And I wanted to do something different with my life. And it was hard, 10 years. I think a big portion of it is, as a, the longer you're in a job, it doesn't mean it's a bank, but longer you're in a job, like, it becomes your identity too. People know you as a certain thing. So
Yeah.
it's also very different, when you move out of that, there's not only the financial, but also just, socially, you kind of like people, there's a transition that you're going to go through, and it gets harder as you get older. But, I think for me, that those were considerations, but, the overarching, my paramount objective was what I just, kind of talked about earlier, was like family.
Hmm.
And luckily, um, talked about Airbnb business. My wife's family had a apartment that was being vacated in December of 2016, and we had to read about Airbnbs and everything, and we're like, okay, well, look, this is a small investment, and let's see, this actually makes sense. And then we did one, and it was like, oh wow, this is great and scalable, and then we continued to grow that business, into what we have today. So I think we were lucky to kind of fall backwards into this business. It wasn't like, hey, we had written out a business plan and executed. It was like it was something that we were trying, and that and other kind of potential ventures, and this one actually had traction, and we were able to scale, and luckily, some good tailwinds with Airbnb as a, kind of macro trend, and low rates, and
Yeah.
good economic environment. So
Yeah.
I think, we were very, we're very, like, we're not smarter than anyone else. I think we're very fortunate to benefit for some good tailwinds.
Yeah, market dynamics always trump individual performance. There's a saying about that, right? Not
Exactly.
discrediting you at all. I'm pretty sure like you worked super hard and you knew what you're doing. But so you didn't have, so it wasn't like quit, start the business. You had something going already, and then you wait until that thing really took off before you finally like handed in your 2-week notice, basically, right?
Yeah, I mean, as you get more senior, it's not a two. It's definitely not a 2 week notice. It's a conversation, because you want to, relationships are important. You want to preserve relationships, so it's important,
Yeah.
to do it in a way that's, that doesn't leave people feel like you left them hanging. So you want to be, and even as a junior person, like, your reputation is important, and you want to, make sure you maintain that even if you leave. So yeah, like, don't quit 2 weeks and like leave a bunch of crap for the next person, because you're gonna be, your name will be spoke upon poorly by all the people, that are left holding the bag. But
Yeah.
no, yeah, you know we were able to kind of continue to grow that business. So we're like, hey, there was something here that, ultimately, decided that, hey, doesn't make sense to, divide our attention, which is really focused on this, and see if this is something that we can scale. And
Mhm.
luckily, after 10 years of investment banking, being able to accumulate capital, and have some runway where we take some risks.
Yeah, yeah. How did that conversation go with? I'm assuming the group head at Jeffries.
Yeah. Kind of the person that hired me in the group had. Yeah, it was. None of those conversations are easy. It was, there were multiple conversations, but I think,
Okay.
they understood that, kind of where I was coming from and ultimately kind of what I wanted to do. And, I think we made the transition easy for everyone, so that, I wasn't, they were able to, it was an easy, it was an easy transition for everyone.
Mm.
So it happened over a few months, transitioning stuff over. So it wasn't, didn't leave anyone holding a bag or anything like
Yeah,
that.
you didn't rage quit.
No, 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 no.
Oh, good
Yeah,
job.
no, that, no rage quitting. There is the office kind of, there's the meme of,
Yeah.
throw out the paper and walking out. Maybe I did that when no one was looking, but
Yeah.
not in front of the group head.
Awesome, awesome. Okay, that makes a lot more sense then. Yeah, so you kept pretty good relationships with like everyone else you worked with in banking up to this point.
You
Uh,
just never, you never know, like, and now I'm an advisor to a SPAC, right? So that's
yeah.
still very, investment banking, capital markets focused. So a lot of that has to do with relationships that I've built over a decade. Excuse
So
me. So,
so how so right now, so let's talk more about this, more about the Airbnb business, right? So you run the Airbnb business. I know there's like two different divisions to it. You also run Scaleway Partners. You also advisor to SPAC. How do you balance your days? Like what takes up majority of your days, and like what's that look like your day to day right now?
yeah, I mean, look, my main business is the Airbnb business. So
I
it's,
guess like talk about that too. Like what is
yeah.
the Airbnb business as well?
Sure. We have 26 properties that we manage, own, operate in two markets, right? In Philadelphia and Pennsylvania, and in the Smoky Mountains National Park in Tennessee. So, my wife and I, started the business. We have 5 full-time staff, customer service, accounting, technology, that work on the business, and obviously, the staff that cleans the Airbnbs. We've grown that to, 7-figure business now. So, but that is my primary focus day to day is growing that business, optimizing it, making sure our guests have a great stay, making sure, that we're maximizing margins, that we are, growing responsibly. That is, a vast majority of my day. Scale Aid is a investment, firm that a few friends and I started. So it's, that's very episodic, when we have opportunities that come in that we all kind of pitch in diligence and decide to invest. We did, the last investment we invested in a Series B round in Mercury, which is a online business banking platform.
Yeah.
So fintech, a little bit of fintech primarily. And then SPAC again. The SPAC is more episodic. So I'm an investor in a GP, an advisor to the SPAC. Obviously SPACs are kind of the market is challenged right now. So my as an advisor, I make sure that we have really good connectivity to the investment banking world. So if there are sell side processes, if there are people we need to speak with on the ECM desk, or kind of wherever we need to speak with, I'm able to tap my network and find the right person quickly so that we can have those conversations. Be in processes that make sense for us, and also just understand what from a capital markets perspective, what are people thinking, how's the market trading. So that is my role in the SPAC.
I see, I see. So Airbnb business takes up like 90% of your time, as it sounds like. Like,
Yeah, no, it's a it's a substantial majority of my day, and purposely so. It is, it's a business that we, obviously wholly own, that has, we think has the most upside for us. So that is definitely where I spend the most time. The other stuff is, investing and, being an advisor, kind of helping along the investments that we are part of.
yeah. So walk me through how building this business was like for the early days, like pre when you're still working in investment banking. By the way, I have no idea how you balance that. So maybe like talk a little about how like you balance both investment banking job and building business part time with your wife. But what has the journey been in the past like 5 years for you building out this business?
Yeah, look,
Like,
in
where
the
did you
beginning it
start?
was,
You know?
yeah, in the beginning it was tough, right? It was, we had, we hired help in New York, but I was, doing a lot of the desktop work, right? Making sure that these investments made sense, hiring, help, making sure things are being put together properly. So it was a lot. There was definitely like very, very long days kind of after signing off on investment banking, kind of starting to work on your own business, like getting up at 7 in the morning on a Saturday and working on it, for so a lot of the fun stuff got a lot of the fun things that I did before, those were put to the right, and that time was allocated towards building the business. But luckily, we were able to kind of grow fairly quickly, so we were able to hire on the ground people that were able to do a lot more of the kind of the day-to-day physical work. And for me, it was a lot more of making sure that we were making smart investments, so a lot of underwriting, a lot of model building, things that I was very familiar with, that I could do. And then after I quit, we really kind of grew that business more. Started buying a lot more properties, doing more renovations, and and then now luckily we had the kind of tailwind of COVID, where travel was great. Well, initially COVID was very bad,
Yeah, I was
so
about to
we had
say.
we had a lot of we had to shrink our portfolio materially, in the second quarter of 20 gosh, I remember 2020
What do you mean by
2020,
that?
right?
You have to sell? Yeah, 2020.
Yeah, we had to get out of leases, we had to sell, yeah, because we didn't know how long COVID would last, and the travel industry, and things just stopped making sense, so we had to kind of exit out of investments, exit out of leases.
Mm-hmm.
So that was those were definitely very difficult times, but I think that was where the investment banking part really came in, because we were able to make, one, we had really good numbers, right? Like we had a full-time bookkeeper, so like we knew like in real time how the business was performing, real-time KPIs, so we can manage the business appropriately. A lot of our peers didn't have that. You could see them really struggle how to make decisions. Um, you know, for instance, it doesn't make sense to keep an investment if you were going to be in the red for 6 months and it would take you a year and a half to break even. That just doesn't make sense, right?
Yeah.
You'd rather kind of just pay the exit fee and kind of start new. So situations like that, and luckily we were able to keep a core part of the business. And as COVID tailwinds started when COVID started turning in June, July, those are 4 very scary months, March through June.
Mm-hmm.
But then we were able to we saw real time the business starting to pivot, and then we really doubled down really, really hard on growing the portfolio in an intelligent way. We didn't do everything. We probably could have been more aggressive, but we have a very I think we have a very nice portfolio that we have very some very kind of best in class margins, which are much more free cash flow margins for me are much more of important versus like revenue, because revenue is a vanity metric. It's really
Yeah.
free cash flow.
Yeah. Yeah. What is the free cash flow metric of like a typical like Airbnb business?
Like, so, SMB, so small, medium businesses, a normal small business is about like 20-25%. Top class in Airbnb world is probably like 30, 35 plus. So,
Mm-hmm.
I think we're definitely on the top quartile of that. And we definitely, are, have made good investments that that generate good cash flow.
Yeah.
And look, the market's changing right now, right? The interest rates are a lot higher. The economy is slowing down, but luckily, our portfolio, at least today, has continued to perform. So, I just their headlines can macro is a very broad brush. So just say that as an operator, it's a very different view when you're operating in business. Although obviously much more micro perspective than if you're in investment banking, where you're being paid to kind of look 30,000 foot view. So
Yeah.
yeah, there's kind of a balance there.
So I actually did a little research into the Airbnb business before we hopped on this podcast. Cause I was like, man, if I'm going to get on this podcast, I better at least know like semi what I'm talking about, or else it's going to be very embarrassing. So because we're getting very deep into the technicals, and I kind of want to dig a little deeper into the business. But from my knowledge, there are 5 different business models for Airbnb. Right? You can rent out your own home. You can rent out a portion of your home or your backyard. You can do rental arbitrage, which is basically you lease a apartment building or something and you just rent that out, assuming the apartment complex lets you do it. You can do glamping options, which basically like you have an RV out in the desert, like Joshua Tree. People use that, or you can become like a rental management, right? Basic customer service. Like you kind of shut. Like when I was in Malaysia, there's people messaging me telling me what to do and stuff. I was like, I'm pretty sure this is not the host. They hire someone to do this. Am I right about that? There's technically like 5 business models to get into Airbnb.
Yeah, I think broadly you're correct, right? There are multiple, and you can divide it however you like, but yeah, you're right. There's multiple business models within kind of broadly Airbnb. So,
Mhm.
if I was to recast it a bit, there's definitely more more of the experience, the glamping, part of it, and there's like online experiences as well, where you're renting out part of your house, or you have RV out in Joshua Tree. There is rental arbitrage, like you mentioned that.
Yeah.
That's where it's a very popular strategy. We use that strategy too, where you can where you would approach a property manager like a Gray Star, someone that owns the building, pay a lease payment, and then have their permission to re-rent that, arbitrage the rent and the revenue between Airbnb and the fixed rent that you're paying, and earn a return that way. That can be a very it has been for us, and it can be a very rewarding strategy. There are drawbacks to that as well.
Hmm.
And then lastly, you can buy property and manage it yourself, which we also do as well. So you own the actual property, so you can participate in the equity upside and the tax benefits, but also participate in the short-term rental part of it too. So there are different facets of value creation there.
What does mostly Trust B&B work with? Are you guys buying properties or are you guys like leasing out properties?
Both. We lease. Excuse me. We lease out properties. They're very good cash flow generators. If you
Right.
pick the right markets, the issue you run into is you become a very the taxes become very they're taxed at a very high rate.
Hmm.
And then if you combine rental arbitrage with buying, you're able to enjoy a lot of depreciation benefits from owning property, specifically bonus depreciation, where you're able to, if you buy $1 million property, you can take a first year depreciation deduction of up to $300,000, which on an after tax basis is over $100,000 of tax that you would save. So if you combine those two strategies, you kind of get the best of both worlds, right? You get you get high you get you get to create a company that has high after tax free cash flow, which is a metric that I'm intensely focused on, because that's ultimately the money that you get to keep,
Yeah.
right?
Yeah.
Revenue is just money that comes in before you pay everyone. And you pay everyone and it gets to your profit, but then you also got to pay the government too. And then that after tax free cash flow is ultimately,
Hmm.
especially if you're running your own business, is what that is the most important metric that or that we focus on. So
Yeah.
we do so in a long way of saying we do both.
Yeah. What what are so this is kind of like a loaded question, and I think it might be a little too broad, but you feel free to answer however you want to answer. What are some good markets for Airbnb right now? Because I know you're mostly focused on Pennsylvania and Tennessee. Like, is there a reason why you pick those markets? Like, why not like I don't know Texas or New York or California or something like that?
Yeah, I mean, look, I think one is, some of these markets are like New York, for example, is regulated. You only can do 30-day plus stays. So
Mm,
there are people doing shorter term stays, but it's I don't know, when a place is regulated, if you're on the opposite side of regulation, it's very hard to scale a business, because there's always that risk that there's that zero risk, right, where everything can be a zero overnight, which it's just a very very shaking foundation to build
yeah.
a business. If your goal is to build a long term business, it's tough to do. Um, yeah, there's states in the South for sure that are good. There are Dallas. Austin are both very good markets. Denver's a great market. New Orleans can be a really good market if some of the regulations have changed. Uh, those are very good markets. Conversely, Houston's kind of tough right now. It's very saturated. Miami's tough as well. There's a lot of supply that's come on market. So, you have to kind of balance demand and supply growth, demand growth and supply growth. And that's where, I think with, for your audience that are maybe more finance oriented, that's where being very comfortable with numbers and analysis is going to really help you. And you'll be surprised at the number of people that can't do math appropriately, that cannot, operate a simple like 5-line Excel model. So to the extent that you can do that, candidly, you are, in the top quartile, not decile of, not just Airbnb business people, but just business people, entrepreneurs broadly. So it's definitely a skill set that is very, very valuable for anyone with finance training, but wants to kind of do something on their own. Whether they don't have to quit. You don't have to quit your job, right? You can, plenty of people have side hustles that that do very, very well while they keep a full-time job. So just a lot of different flavors of how you want to reach your goal.
Yeah. Speaking of skills, what would you say is like the biggest skill you have to learn in order to pivot into like this type of business? Like, because I think becoming an entrepreneur is like it's skill in itself. Like it's a whole entire shift of mindset of how you view the world in a way, right? Because now it's like you're basically out on your own. It's like you have to learn how to sell yourself. I think the biggest skill or the largest skill I had to learn just from content creation, e-commerce is how to sell, how to market, right? I always thought content creation was just like, oh, you just create content. But at the end of the day, content creation is just masking the word marketing, right? Beneath content creation is really what it is marketing. Of course, it's like, you gotta be genuine, be yourself and stuff. But if you don't have to market, content creation becomes a lot easier.
Right.
Yeah. So what would you say is like the biggest like skill or hump you have to like overcome and learn?
Yeah, no, that's a great question. And
like,
as I think
personal or it could be personal or technical.
Yeah, no, I think actually it's a lot of personal. It's very, you have to shift the way you think. When you work for someone else, you're an advocate on behalf of a client, right? So the way that you approach business, can be some, and for M&A specifically, it can be very zero sum. And that's the way that you approach negotiations and transactions, right? Because your client's paying you a lot of money to advocate for their best interests to the nth degree. Excuse me. As an entrepreneur, as a business person, that may or may not be the right approach, and I find that to be not the right approach for many different situations, because it's a long-term game, right? Like if you always are that person that's difficult to work with, you're not going to see good deal flow, right? If you're always going to be that person that wants every last piece of meat on that bone, right? You're not going to be viewed as someone that people want to do business with, because ultimately as an entrepreneur, as a business person, you want to develop a network of people that you work with consistently, and people are going to want to work with you if they make money too, right? You can't be just you that makes money. Everyone has to make money. So I think that is the mindset shift that for me took a while to get to, and I still continue to work on that. It's, sometimes it's okay to lose a little bit. Sometimes it's okay to leave a little bit more for the other person. That other person's happy, because you realize that there aren't that many people out there that are, it's a team sport, right? Even though you're an entrepreneur, it's really a team sport. A lot of what I've learned is from other people, and it's because, I'm able to deliver value to them, they're delivering value to me. And then, everyone succeeds. So I look at it, it's a very much of a 1 + 1 equals like 4 or 5 game, right? It's really not the, hey, there's a pie here, and, it's going to be Andrew and I are going to lock ourselves in a room and see how much pie, who gets the most piece of that pie, because that's just not going to be a very, you're not going to, it's going to be a very, it's going to be hard to be a successful entrepreneur if that's your mindset. At least that's my experience, but
I 100% agree with what you just said there. And I actually never thought of it that way, which is like when you're working a job and you want to get a raise, I don't care how much output I produce for a company. I could produce the same output. I just want to get paid more, right? Because you don't care. You just want to get paid more. It is, I need to win, and I don't care about the company winning. I don't care about my manager winning. But what I learned so far, and I think the biggest example I learned from this is doing brand deals. When we work with brands, it's like, yeah, they're going to pay you. But if your content doesn't perform, they ain't going to work with you again. It's really like you got to figure out how both parties can win. Like, not only does it feel better that way, but also like it's a long-term game. You play a lot of
So, yeah.
times, right? Because people, I mean, you say banking real small, entrepreneurship world, depending what industry you're in, it could also be pretty small. I'm assuming the Airbnb, like people who are top of the game, like you probably know a good handful of them. It gets smaller as you go up, obviously. So no, that's definitely like a point that I was like, oh, interesting. I never thought of it that way, but it's actually very true. That's like another learning you have to learn as well too. It's not so much about like how can I win now, how can our people win, because our people win, you somehow end up winning as well. It's kind of like
you almost all, and to my experience, you almost always win when you both win. Like you end up winning more because there's a next deal, right? If you just a crude example, like, there's $100 and like, I got 90, you got 10, like, great, I won. Right. But then there's no next deal. But, if, it's, 55, 45 each way to the other, but there's like 50 deals in the future, like we all going to make a lot of money. Right. And that's what you want. You want everyone to be like really happy to do a deal with you because they made money, you made money. And then it's like, what's the next deal we're going to work on together? Let's bring in more people, make it bigger. Like that is what you want. Right. Because recreating relationships every single time is exhausting and just like it's not a scalable strategy, right? You need to, when you work with people, you want them to continue to work with you, say good things about you, because that's going to snowball. That's the real flywheel, right? To use kind of that, I think it's an overused term, but that is the flywheel of entrepreneurship, is that you have a great reputation and you get a lot of deal flow. People say good things about you because that's the hardest part. You get more deals, you do bigger things, you make more money, and then you have a bigger network, and then that really will grow on itself and really kind of help you. And it just makes it a more enjoyable experience. Like to your point, knowing the other people in the Airbnb business, we all talk business together, but it's great. You see them at the same conferences, you go out and have drinks and you have big dinners, and it's nice. You kind of grow up together in the business, and it becomes a very enjoyable experience. Because it can be very, very lonely. Entrepreneurship can be very, very lonely, just like a job can be very lonely. Yeah. Right. So man, like, sometimes you just, you need to just like shoot a text to someone and be like, hey man, like dealing with this, like, have you dealt with the same thing? And they're like, oh yeah, sure. Just give me a call. And they just hop on the phone, talk an hour, like shoot, kind of just like shoot the breeze and talk business, talk family. And then you feel a lot better about it.
Yeah.
You feel a lot better. It's going to help you, get in the right mindset.
Yeah, because I think one of the struggles that I go through a lot is like there's not a lot of people I can talk to about like the things I'm doing, because I feel like when you work in corporate setting, you have your peers, especially investment banking. Like your buddies, you're up at 1 a.m. Your buddy's up at 1 a.m. Right? You're talking through Skype or whatever. But I feel like a lot of times, the entrepreneur, it's like you're up by yourself, and it's like, I mean, you have your wife, I have my girlfriend, but aside from that, it's like you can tell them about your problems, your issues, but it's kind of hard to have like that real. I mean, for you it's a little different because your wife is your partner in the business, but it definitely can be a very lonely journey. And having people side by side with you, especially like others who are like kind of at the same level that are growing with you, it can make a tremendous difference. On that note, like, have you ever? What was kind of like your darkest time in entrepreneurship? 'Cause I know entrepreneurship, it's a roller coaster up and down.
Yeah.
Like, was there ever a day where I'm like, oh shoot, I almost lost my business today? Or like, what was like the biggest failure / like biggest mistake you ever made?
Yeah, I mean, it was COVID. It was. I think it was like March, like 14th or 15th. That was a day where Airbnb allowed everyone to cancel their reservation without penalty, and
you take the hit, right?
Yeah, we as the host take the hit, right? So, I remember we one day, I think it was only the 14th or 15th, we go and look on our systems and we literally have nothing on the books. There's no, all there is cost, right? There's lease payments, there's mortgage payments, there's electricity bills, there's all, a bunch of fixed costs, and there was no revenue. That was very scary. It was like, well, we don't have a business right now because there's no revenue. We have a collection of assets and liabilities, but there's no revenue. So, that was when, you really had to dig deep, like, hey, is there something here? Or, look at the numbers, obviously, you got to look at numbers and just be very creative on how you can, what parts of the business are worth saving, and, what parts you have to let go. And then, play for that. If there's recovery in 3 months, then, what position do you want to be in? So just like that kind of scenario testing. It were very, very, very stressful times. And, in the backdrop of COVID, right, everyone was like sequestered at home. In New York, there were times that the grocery store was like closed, or there was no food, right? And there was like crazy stuff on the streets. So it was a very stressful time.
Yeah.
I think that was probably the worst time. That kind of mid to end of March period was very, very, very difficult. And candidly now, as things are slowed down a little, things are slowed down obviously year over year, because last year was so good. I think that's the strength of entrepreneurship, that you kind of go through, and banking, right? Like, I've gone through, you go through a lot in banking, right? Like, you really push yourself, like, you get dumped an assignment at 10 o'clock and you're like, this needs to be done by 7 in the morning. And you're like, oh, I guess we got to, you grind through it. And then, you take that experience and apply it to your business, and like, okay, well, we're going to get through this. And you work hard, and you kind of figure it out. And, luckily we were one of the lucky ones to be able to get through to the side and thrive. We know a lot of people that didn't make it either. So, I think we're very fortunate, to be able to survive and thrive. So we don't take that lightly at all. We know we're lucky. We know that, hard work and, luck, equal whatever parts to play in it. So, I think that entrepreneurship, that's what it is too. You got to dig deep sometimes, make the hard decisions. And there's no one to tell you if it's the right decision or wrong decision. There's no one to ask. Like, you have to just like, you need to have original thought, right? Like, hey, this is what I believe, and like, stick with that, right? Because other people's advice candidly is useless. They don't know your business, right? It's all platitudes and like very high level things, right? If you're in that situation, you got to trust yourself, right? Like, hey, this is what I believe in, and then you got to stick with that. So yeah, I think that's you got to have that kind of intestinal fortitude, and intellectual fortitude, that like, trust in yourself and that you're making a decision that's correct. But also, got to be Bayesian about it too, right? Like, there's new data that says like you're wrong. Like, okay, well, I got to pivot. It's not, you don't want to be hard headed, but you want to have like strong feelings, but held lightly, and be always open to new data and new data.
Yeah, I think what you just said there was actually so important, and it's something that I sorry, I personally struggle with a lot as well, which is like, you don't have anyone to ask. It's like something goes wrong, you're like, I mean, I'm pretty sure you have mentors, right? You have mentors you can reference, but it's like they are giving you advice based on their experience and what they know, blah blah. Sometimes, like, I think like a lot of decisions we make as an entrepreneur, this also the personal side of it as well, right? It's not just like sometimes it's like 8% business, but it's also 20% like because you became an entrepreneur because it was personal in a way, right? If you want to just make money, you probably would just stay in investment banking. There's a reason why you became an entrepreneur. So it's always that personal aspect that comes into making these decisions as well. It's like, what do I want as a person?
Right.
And how does it fit into like my goals as an individual? And I think that's the hardest part. Just like, you don't have a manager to ask, you don't have a manager to tell you what to do. And I remember when I was an analyst in investment banking, all I wanted was more high level strategic thinking and to have more of like a voice and more value add. And now it's kind of funny. That's all I do all day. I'm just like, damn, I kind of miss being told to do. That's kind of nice. I kind of just want to be told to do it and like end my day and like, whatever, right? But no, it's every single day you're making like these like strategic decisions in a way. It's just like, it's not the way you think it is. Like, oh, we do this. Something it could be as simple as like, do I tell this person this thing right now? Or I don't know. Should I? Is this the right choice? I'm not too sure. But I mean, that's great. That's crazy. Like, what would you say? So you would say like that was definitely like your lowest time. Was there any like beside like closing down all these like different different rentals and selling them off? What was like the hardest decision you had to make if you had to pick one?
Yeah, I mean, just closing stuff that was like massively profitable the year before, just knowing that and a lot of time and effort that went into it, and being able to be like, look, that's a sunk cost, right? Like, that was based on a certain set of facts, and the world has changed. And, even under different scenarios, like just the payback, or like it was just too much risk to, that just didn't make sense. So, it really is like having to cull the herd, right? Like things that you spend a lot of time on, a lot of blood, sweat, and tears, right? That you're like, you got to kill it because, like, like on a probability basis, like it's unlikely to work out. It's going to drag you down. It's going to drag your decision making ability. It's going to drag your clarity. It's going to drag you financially. So yeah, like there was definitely a couple of ones that like were near and dear to us that we had run for a long time, or like just it was meaningful that we had to close. That in hindsight, candidly, they were definitely the right decisions. I'm glad we did that. They were definitely the right decisions. But during that time, I remember being like, like this sucks.
Yeah, you're losing something, right? You're like, this was so good, but I have to do it, and you're like, I don't know if this is the right choice. I may regret this later.
Yeah, the things you don't know. I mean, hindsight in 2020, right? But yeah, now, I mean, we didn't know. We could be wrong. Like, oh man, we spent all this money to do all this stuff and put this thing together, and now like we're gonna sell it for peanuts. And then it bounced back 2 months later. Like, oh, well, that was really dumb, right? So yeah, like I think part of it's just like and it's just probably I think I very much now it's like probabilistic thinking, right? Like I really try not to think in absolutes. It's like probability wise, like this is unlikely to work, right? So you kill it, right? And but you realize that like there is a possibility of work, and then sometimes it goes against you. But if you make enough decisions, the right weighted decisions, then you're going to be better off in the long run. But recognizing that you're going to make mistakes, and that's just part of the process. I think that too, right? Like especially in banking, you're expected to be perfect, right? Everything has to be right and perfect. But I think when you're an entrepreneur, like candidly, you can't. You're going to be wrong because like you're just one person, or you have a small team, and you have to make a lot of decisions, and they're going to be wrong. And you can't spend like 3 days on one decision, right? It's like, all right, like I got a bunch of things I need to do today, and like it's the 80-20 rule, right? Like look, this is what I think, and it makes sense, and I make a decision, and then you move on. So yeah, I think for us, like a lot of that, like speed of execution, at least in our organization on the Airbnb side, is very, very important. Like we really try to make decisions quickly and implement them quickly, and then not, kind of dither around and like maybe not take a long time to do stuff because we've seen that to be an anchor in other organizations. But like we're small, we're at 26, right? So we're not like that big. There are people with 100 or 200, but this works for us, right? Like I said in the beginning, we had certain goals that we wanted to achieve, and got to spend all day with my kid. Took her out to the park and take her to school, and all, like those things are important to me. Versus some other things that are important to other people. So again, just the goal, whatever goals that you have for yourself, like the long-term planning, like what do you want out of life, right? And then you drive towards that goal relentlessly. And I think that goal setting is extremely important.
Yeah. I think that's like one of the biggest thing I had to unlearn from investment banking, which is like perfection shouldn't exist in entrepreneurship. You don't want perfection because it's like it's going to hurt you. You're never going to launch. You're never going to make a choice, and you can never move on to the next thing, basically.
Yeah, yeah, exactly. Like that extra 20% is going to take you like 10 times as long. Yeah. And then you just end up nothing ends up getting done actually. And then because nothing is ever perfect, like there is no such thing.
Yeah. Do you work more now or did you work more when you were in investment banking?
Man, I work 24 hours. I work. I mean, I worked a lot in banking, right? But at a certain point, you just kind of shut off and just like, look, whatever, kind of it's done, or you're in between deals and you're kind of on the beach. No, I mean, I think that's the cool part. That's both the blessing and the curse, right? Like we're blessed because there's a big opportunity set, and we're excited. So we're lucky that like we have a lot of things to work on because there are attractive opportunities that we want to drive, right? So it's good, right? You don't want to have no opportunities sitting around like, well, this sucks. But I know you work all the time. You think about work all the time. But the nice part is you get to choose, right? Like you get to choose when I want to shut off, I can, right? Like, hey, like I'm going on vacation next week, right? We got a house in the Hamptons, and we're gonna work from there, and we're gonna enjoy time with family, right? I wouldn't be able to do that during banking, right? It's after Labor Day, and it's like time to grind. So
yeah,
that's the nice part, right? I get to take the whole family out, and we get to enjoy that. So but I'm still gonna be working a ton when I'm there. But I'll be working when I want. So
It's more inspiring work too. It's not
yeah,
an investment banking where it's like, oh God, this client just needs
it's
to
just you're working for
let
yourself.
me know.
You're working for yourself. That
Yeah.
all the equity accrues to you, right? And it may be a smaller dollar amount, right? But it's yours, right?
Hmm.
So I mean, I was working on like $1 billion deals, and now I work on like $1 million deals because it's like but it's fine. But it's like because it's mine at least, right? It's not I get a percentage of that deal value and another percent, whatever, if it's $1 billion sell side, it's like, $40 million fee. And then, it has to go through the bank hierarchy, and you may see, 40,000. I mean, whatever number someone else decides for you, right? This other one, you decide, the fruits of your labor are all yours. So I find that exciting. So do you, I think.
Yeah. Yeah. Personal question. And
Yeah.
this is a question I feel like at least I get asked this quite often, not quite often, but here and there, is if I quit investment banking, can I make just as much money? So my question to you is, do you make more now, or did you make more when you were in investment banking?
I mean, investment banking, there were definitely, it was cyclical, right? Like, there were good years, there were years that were like not so great, especially in the beginning. So I know I'm not like answering your question directly. There are
No, but
times.
it's true. It's like
Yeah,
entrepreneur too.
yeah. No, I mean, I think in the aggregate, I think I'm probably, making more money now than I did before, right? Because asset values have increased, materially over the last few years. So,
Yeah.
there's a lot of built-in equity, and especially in real estate. So, like, that's a great part about leverage, right? Like when it goes up, it's great. When it goes down, it's extremely painful. So we were lucky to participate in a big bull market. So we're obviously cognizant that the market is changing, and positioning ourselves accordingly. But there's still a lot of opportunity in this market on the real estate side.
Hmm.
These trends aren't going to go away, so it's just going to be a little harder, right? You're going to have to be much more before. I would just say before everything worked. Now only certain things work. So like you have to be good, right? Because you have to actually find those certain things that work and be able to execute. But there's still good returns to be had. It's not like before where anyone can throw something on a dartboard and likelihood of success is high. So
Yeah.
that's the dynamic that's different now.
Yeah. Yeah. Like there's this whole
I hope I answered your question.
No, that was good because like I didn't make a fair point there because like there's this whole asset portion now to your, I guess, like it's not just like straight up salary anymore. You have like an asset portion as well, so it can be also hard to like calculate that, like how much that means. Because
Well, you think about banking, right? All right, so you live in New York, right? You have federal taxes at 35%, and for your New York audience, in California, it's a similar situation, 35%. Federal taxes, 10% New York City and state taxes, right? You're already at 45% marginal tax rate, and then you add Social Security, Medicare, all that stuff, right? Like you really, you have $1 of headline income, but you're probably taking home like 50 cents, 48 cents, 50,
yeah,
depending on the year. So it's really half, right? So if you got $1 million, you really kind of make 500. But with real estate investing, there's a lot. Real estate investing, the tax code is really built to promote that. So there are a lot of non-cash deductions that you can legally take that allows you to defer your tax liability and maximize your after-tax income, which so like for instance, like every real estate dollar literally is worth 2 investment banking dollars, right? So
yeah,
do the math.
yeah. Did you make over $1 million a year in investment banking?
Yeah, I mean, yeah, there were years where bonuses were really good. Like last year, there were VPs that made 700K, 800K in bonus. So last year was, I know a lot of people that made really good money last year. So I think people did really, really well last year. Probably spent your bonuses at the Hamptons or overseas or on a watch. But this year is going to be a little different. So I encourage people to kind of plan for a cycle.
It's okay. I asked that for a TikTok clip. That's gonna be the hook.
All right, fair enough.
All right. Well,
we can do that again. We can do that again if you want.
No, I think that was fine. So, all right, as we come to close to this podcast, I want to ask you one more question. But before I get there, Michael, you're on TikTok.
I am.
So how does it feel to be one of the oldest generations on TikTok?
it feels great. I have that market. I have the 40 plus market all to myself.
Yeah, yeah.
No, it's great. Like the technology behind TikTok is great. I have to work on my dance moves, but it's a great way to kind of build my social media presence. The reason we're doing this is because we think the Airbnb business is a very it's a lucrative business, and it's going to be a very long-standing trend. So we want to be able to help people get on this journey if they're interested. There's a lot of value for someone that has a job that is interested in real estate and has an entrepreneurial mindset. This is a very viable path to explore that. And we didn't, we were very lucky on this journey to have a lot of people help us, and want to give back by sharing our journey with others and hopefully inspiring others to whether it's Airbnb or anything else, that there is an alternative path. That if you're unhappy, you're 9 to 5, you have other kind of long-term aspirations that may not align perfectly with your 9 to 5 job, then there are paths out there, and we're one example of many, and we hope to be inspire someone to take that step.
Oh shoot, I have like other questions for you now. Now you're bringing this up. Like can people run an Airbnb part time while
Yeah.
working a job? Like it's really possible.
I mean, I know someone that has like 35, and they have a full-time job. They have a family. Their job candidly is, pretty chill. They work for I won't say who, but it's a very, he's able to control his schedule, and he has like 35 units, and, he's making very good money. So, and I know a lot of people that have, smaller portfolios, but like are doing, 6 figures, running, a couple of units, a couple of high quality units, but it's very, very doable. There's a lot of automation and tools out there that allow you to automate the business. I wouldn't say passive. There's still work that needs to be done, but you can automate a lot of the road tasks.
So for my audience, because my audience is predominantly college students and probably fresh grads, right? People just out of college working their first job. What would your recommendation be for someone that wants to break into the Airbnb business if they're at that stage? Think about like probably don't own a house yet. Probably maybe in debt, maybe not in debt, maybe making a good high 5 figure, low 6 figure salary or something like that.
Yeah. I think there's two paths, right? I think one is, you save up enough to buy, when you have a W-2 job, it's actually a very valuable asset you have, because you're able to get leverage at, very reasonable rates. So you can buy a house for, 5-10% down, for example. And then, and then take that and Airbnb that house, right? So that's one way. If you want to, kind of go a less riskier path, then either rental arbitrage is actually a very, very good approach. Depending on where you live, where you went to school, or your hometown, the areas that well. If you have $20,000 to start, for example, you can get 2 Airbnb apartments, and if you run it properly, it's a couple $1,000s of free cash flow every month that you can generate from that. Which, if you're making $120,000 a year, call it, let's say $10,000 a month, your biweekly paycheck's $5,000 after taxes and everything. You're probably netting home like $3,500. But if you can add an extra $1,000, $1,500 to that, that's pretty meaningful. You just increased your take home pay by 33%. That's what can you do an extra $1,000 a month, right? I think people would be pretty happy with that, and continue to. And then once that Pandora's box is open, then you're gonna have a lot more ideas, and maybe it's real estate, maybe it's not, right? But I think just knowing that, proving to yourself that you can be successful, the entrepreneurial side of you can be successful, is a real game changer just for your own personal development. And I very, very much believe that, because for me, I had success the different entrepreneurial activities when I was younger, as a teenager, and that has translated to me, even now as I'm 42 years old. Like you just know that you can do it, and once you know that you can do it and you believe in yourself, then really, like, anything is possible. You just have to believe that you can do that, and the easiest way to do that is just have small successes early on.
Small successes. Yeah, I like that. I
Yeah,
like that.
compound those small successes into big. No one hits a grand slam in their first time up, right? Like you just collect those singles, right? Like you just collect small wins along the way, and then just like and then you get more and more at bats, and then once you're more comfortable, you're going to take bigger and bigger swings, and that's how you're going to be successful.
Yeah, yeah.
Because
Two
you're going
quick
to strike,
follow.
like you're going to strike out here and there, right? So strike out small, right? Lose small bets, right? And then as you like, okay, you kind of start finding your groove, then you just take bigger and bigger bets, and and then your probability goes up that you're going to hit something out of the park and do very well for yourself.
It really is a numbers game at the end of the day. I mean, it's a numbers game. You gotta work in the right direction, but once you work in the right direction, it really comes down to numbers game as I'm learning it. And
Yeah.
I guess I can say I'm still waiting for my big strikeout right now. Hopefully it comes around soon.
No, you built a great following, and I very much like your content. I think you're doing a great job. But like you said, it's just like every day, consistently taking good at bats. And we're all on this journey together.
Yeah, yeah. All right. Well, my last question. So my usual last question to my guest is usually, what advice would you give to your 18-year-old self? But I'm gonna do a little different for you. If you were to go back today, maybe not 18. I don't know. How old were you when you got your MBA, or
I graduated when I was 29.
when you graduated 29? Let's go further back. Let's just say you're 22. You just graduated undergrad, right?
Yeah,
Because we gotta go to college, right?
yeah.
We're good kids. Um, would you, and knowing what you know now, would you still would have pursued investment banking, or would you have gone straight into something more entrepreneurial?
I would have went into investment banking, but I would have probably just stayed for 2 years. Investment banking, that training, just to get there, those skills that you need to develop, the soft skills, the hard skills, the you know just everything that it's really hard to get in investment banking. So the fact that you made it there says something, right? People are like, oh, you were an investment banker, right? That says something about you. You are actually you're able to do something hard, right? Like that is something that is valuable, right? And people recognize that. But I think for me, 2-3 years was probably enough to get what I wanted out of it. And then I think had I had a chance to do it over, I probably would have left. That was a VP1, and that was 2014. So there was obviously a lot of things have happened since 2014 that had I kind of participated earlier, I think I probably would have I would have enjoyed having those options. I would have enjoyed being able to at least take swings at those opportunities. And I don't regret it at all, but I think that's something where 2014 would have been a good kind of off ramp from banking after VP1, and then leverage that skill and that capital into something else. But look, we're all on a journey, and you pull one string, it doesn't mean not everything was going to fall into place. So I really enjoyed the 10 years of banking. Really enjoyed the people, what I learned, and excited for what I'm doing now. And like the path is out there, and it just really finding out like what you really want long term, and being consistently driving towards that goal. If you can do that, then you're going to be very successful.
All right, so I made the right choice. Conclude your story. I made the right choice. Let's go.
You got it. You did.
All right, Michael. It has been a pleasure to have you on this podcast. This is probably the longest podcast I have done, but I just think there was so much to talk about, so much to learn from you. And yeah, it's great. It was great to have you on. And other than that, hope to talk to you again soon.
Thanks for having me, and thank you for this opportunity.
All right. Have a good day, Michael.
All right. Thank you.